Hello traders, welcome to the daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. Okay, let's start. On Friday, at the end of the very busy week, we mostly have small correction movements of recent trend swings. We came back to the trend on most of the instruments after FOMC hawkish dot plot. What is the trend? Well, the dollar is stronger, gold is lower, stocks are higher, and today, apart from stocks, we're having small correction movements on most of the instruments. Before I will show you the charts first. Let me show you the economic calendar. Not much going on today. As you can see, we had CPI from Eurozone, which came exactly as expectations. So not a big deal, not a big reaction on the market. We still will have a data from the housing market in United States and Baker Hughes oil rig count. That's still to come. As always, on Friday, let's check what will be happening on Monday and the next week. This week we had Fed, we had Bank of England. And this week the next week we will have Bank of Japan deciding about monetary policy and rate decision, and also a press conference. Also, we will have IFO. On Monday, on Tuesday, meeting minutes from Reserve Bank of Australia. Wednesday, relatively calm. Thursday as well, apart from the GDP from United States and durable good orders. And Friday, calm. Obviously, it will be December 23, so markets will be flat. I think after Thursday, after this data will be shown, after we will find out the durable good orders in the United States, the market will go flat and will stay flat till the New Year's Eve and until the first days of January. So that's still to come. Let me show you the charts right now. Let's start with oil, because oil was having this downswing, maybe on hourly chart. We had this downswing yesterday. We almost made the correction equality movements. You see those gray rectangles. We just missed 9 cents, right? For the correction equality movement. And now the price is making inverted head and shoulder formation. That's in the short term, that's in the mid term. Let me draw you a neckline of the inverted head and shoulder formation. Also, let me draw you a trend line of this correction. That will be the upper line, let's say, of a flag. Maybe let's use other color like blue, for example. A bit lower, I would say. Lower line of this line. So this is a flag. Once the price will get here, this will trigger a buy signal. Why is that? Because of 3 things. First of all, we will come back above a horizontal resistance on 23.6. After that, we will break the upper line of the flag, and after that we will break the neckline of any short-term inverted head and shoulder formation. So 3 factors showing us that when the price will be here, we can think about opening long position according to the midterm trend, midterm sentiment on the markets. So very possible bullish scenario here, but what we have to do is we have to wait for a breakout, because so far we are still in a flag. This inverted head and shoulder formation is not fully developed, so we just have to wait. Next instrument is DAX, and again, to head and shoulder. Let's see that. This is inverted head and shoulder formation, yet without a signal, and on DAX we had two of them. Head and shoulder formation, head and shoulder formation. Both didn't give us a sell signal because we didn't have a breakout of a neckline. So don't enter the head and shoulder formation or inverted head and shoulder formation without a breakout of a neckline. We had a breakout of the upper line of the trend continuation pattern, which in this case was a flag, and the price advances higher. So again, that's what Deutsche Bank said, that it doesn't matter what will be the outcome, what will FOMC say and do, the outcome on the equities will be higher prices, and that's what actually we are seeing. So good for their analytical team, but it wasn't a brainer. It was happening for the last few months that markets were going higher no matter what. And okay, now let me change the account, that I will be able to show you currencies. And on currencies, on weekly chart, as you can see, we are on the lowest levels since January 2003, and we're aiming for the lowest levels in since December 2002. What's happening on a little bit shorter term? What you have here is this 1.0520 support highlighted with the green area. It was a support, now it's a resistance, and after the breakout, price usually is aiming the closest resistance to test it. That's one of the principles of the price action trading, that broken support becomes a resistance, and that's what we are trying to do right now. We are trying to test this broken support as a closest resistance. This correction stopped just now, but in my opinion they should advance a little higher, especially that they have on like 60 pips together, so it's not such a long trip for them. We may have one test, two tests here, but generally speaking, we should see a further downswing on euro to American dollar. Also, very interesting situation on cable. You know that we are telling about short positions on a cable somewhere here, and we are having a downswing. Why we were advising short positions? Because we had a trend continuation pattern here, downswing, trend continuation pattern here, horizontal resistance here. Those corrections were more or less the same. Let me show you. Sorry, this one should go a little bit lower. Just we change the color. You see those corrections were more or less equal, and the second one was a little bit bigger, but not much of a difference. 85 pips in terms of cable, it's not much. And we actually got a breakout of the horizontal support here, breakout of the lower line of the flag, and actually activation of this flag. So again, flag is a trend continuation pattern, trend is negative, we had a correction, we had a breakout, so now this trend, the main trend, which is a downtrend, should be continued. But after a breakout, we may see a bit of retracement, and again, broken support becomes a resistance. We should bounce from those two, so from the horizontal resistance highlighted with violet color, with purple color, and from the lower line of the flag. That's our scenario for cable. On Australian dollar to American dollar, you remember what I was telling, that here downswing is more probable, and look at that. Yes, we are having a downswing. Right now we are telling you about that somewhere. Yeah, somewhere here, exactly here. Now we are lower. The price is trying to make a double bottom formation, but we're not far from the support. We eventually should get there. It's like 40 pips there. This support is important. Look at that. Those two lows, those, and we should get here and anytime soon. The next one is located here. So maybe contact here, a bit of correction, then a breakout and a movement to this support. To this support we still have 200 pips. And from the technical point of view, we should get there. We should definitely get there, because there are higher odds of the for the bearish movement. Here, similar pattern, because there is a downtrend, there is a trend continuation pattern, but we didn't get the breakout as in Aussie or, for example, on cable, but we got a bounce from the lower line of the flag. So without a breakout, the price is still locked inside the flag. There was a nice correction equality movement here. Third, the same correction in a row. Now the price advances above 38.2 Fibonacci level, which will remain the closest support at the moment. We were expecting a small bounce and a movement and a downswing, but obviously FOMC hawkish dots change that scenario. So actually now the closest resistance here is 50% Fibonacci level and previous highs, and there are higher odds that we will test this level again than the odds for a bearish breakout here. But still, as long as the price stays inside the flag, for the long-term traders, sentiment remains negative. Once we will be able to break outside of the flag, or for example go above 50%, the sentiment will be turned into a neutral one. But once the price will go above 61.8, this sell signal will be denied and the sentiment will be changed into a positive. Gold suffered a lot recently, you know this, downtrend, flag, downtrend, flag, downtrend, flag, downtrend, flag, downtrend, pennant, downtrend, and a bounce. Why is the bounce here? Well, we have a retracement on whole market, right? But we're approaching this area, you know, this $1,100 per ounce, where the price can bounce from the upper line, from this red line connecting recent lower highs, and the green line connecting recent higher lows. So this is the place where those two lines cross. This is also psychological barrier of $1,100 per ounce, and from this point the price can but does not have to bounce. The next very important support is $1,050 per ounce. I don't think we should break this level I think this level will be used by many investors to buy more gold. Euro to Canadian dollar. Our scenario is still on the table. Both of our, well, this one is not longer on the table because from this point we're having a correction and we're aiming recent support to test it as a resistance. I hope you can see that the support is technically relevant, and the comeback that we are seeing right now does not surprise you, because it shouldn't. Because it's almost always like that after the breakout we can see a correction. Euro to British pound is defending on a very important support. As you can see, this green area is helping the bulls from actually the second half of the year. So we had a bounce in July, now we had a bounce in August, in September, we're having a bounce in December. Sentiment remains neutral. It's not positive. In my opinion, it's not positive. I know we do have an uptrend, we still have higher highs and higher lows, but with a long position I would wait for the breakout of the upper line here, of this line connecting recent lower highs. Why is that? Because the pressure on the support is high, and actually if we consider this a start of the midterm downswing, what we're having here is a descending triangle. And descending triangle formation is showing that the pressure on this support is high and every single bounce from the support is lower. So actually those buying orders are being consumed, and soon we can run out of those buying orders and the price can break this level. So in my opinion, wait and see approach would be the best idea here. Wait for the breakout for the buyers, for the long positions. Wait for the breakout of the support for the sellers, for the bears. So far sentiment is neutral. When it's like that, I don't want to enter the market. I want to enter the market once I have all odds in my favor. So far, I do not see this kind of a situation on euro to British pound. American dollar to Swiss franc, very nice upswing again, obviously. Here we are having a small correction. Well, it would be nice if the correction came to this place, but I don't think it will be the issue here on this market, because this market is too strong. So maybe at least 38.2 Fibonacci can be a good support here, but it doesn't really matter how deep we can go. The sentiment here is definitely positive. Silver also in troubles, but they are trying to find a local support here on the lows from the beginning of June and from the highs from the March and actually from February. So is it a decent place for a bounce? Yes, it's alright. But look at that, we're above 61.8, so definitely trend is negative here, and we should expect more of a breakout of this support rather than a comeback. Buy option is no longer on the table and is frozen till a breakout of this blue line connecting recent lower highs. But still, to this breakout we do have $2, $3, and to this only a few cents. Australian dollar to Canadian dollar, maybe in a short-term situation, this still can be considered as a false breakout, but that's not how the false breakouts usually work. how they work is that they cause a strong retracement, so something's wrong here and the selling pressure is too high. So for me it's a no-go zone because the odds for a breakout and for the bounce are more or less even. New Zealand dollar to Swiss franc. Surprisingly, the price is advancing lower. I was thinking more of a maybe let's go like that. I was thinking more of an upswing here. So this is the uptrend. Okay, upswing because we do have this horizontal support here, but as you can see the price do not want to follow that. Maybe let's see correction equality movements, but this one is very deep. They should bounce from the trend line as long as the price is above the trend line. The uptrend is not dead, and the long and the bullish sentiment is not dead here. Euro to Australian dollar. We were telling you about that recently, that we had a position yesterday. It was closed on break-even point, so luckily we didn't lost money on it. We were earning almost 1%, over 1% of our account on this position, so that's why we changed the stop loss on break-even point, and this position was closed on break-even point. We earned like, I don't know, $20 on that, along with the positive swaps. This can be considered as a false breakout, and we do have a reaction of that. Sentiment still is negative because we are in a trend continuation pattern and trend is negative here. Short-term sentiment is positive because of this false breakout here. Mid-term and long-term sentiment are negative, and mid-term and long-term traders will definitely use the higher prices to open more short positions with better prices. So we keep our eye on this position. We keep our eye on this instrument because it looks very, very optimistic. Next instrument is American dollar to Japanese yen. Remember, it will be strongly influenced on Monday when we will have a monetary policy statement and interest rate decision, and obviously a press conference. Remember about that. Sentiment here is definitely positive. We are aiming for the line connecting recent lower, maybe not recent, but long-term lower highs, as you can see, from June 2015. That will be a nice place for a correction. Well, correction is highly anticipated here. It didn't happen so far. Only pause in the upswing was just ascending triangle, which is a trend continuation pattern. Then a small correction here under the very important horizontal resistance here. As you can see, a shooting star, but after that this formation was ignored and the price advanced higher. So here's the example of one of the strongest uptrends. And as we said, Mr. Kuroda, Mr. Abe are very happy because their aim is weak Japanese yen. Remember, why is that? Because Japan is an exporting country and a weak currency is good for exporters. Last but not least, New Zealand dollar, American dollar forgotten in this week because it wasn't behaving very nice in terms of the technical analysis. They bounced from the lower line of the flag and they advanced higher over 38.2 Fibonacci level, but hawkish FOMC helped here a little bit, and we are having a test of the lower line of the flag again. Is the flag relevant? I would say so, because we have a downtrend, A downtrend was paused with a flag here, is paused with a flag here. A flag ends with a head and shoulder formation, very nice. Left shoulder head, right shoulder formation, but this was not very technical. I don't like this movement. I was more anticipating a breakout of a neckline, then a contact with a horizontal support here and lower line of the flag, but not such a big retracement. I was expecting retracement to the lower to the neckline and then a bearish breakout. But okay, fair enough. They wanted to have a bigger correction. Okay, but now I would like to see breakout of the lower line of the flag, breakout of the horizontal support here, and a nice movement at least to this level. That would be very technical movement. And if you compare Australian dollar here, they already did that. Obviously it's a different time frame because here it's H4, here is D1, but still in terms of the principle is very similar as on cable. Downswing, trend continuation, pattern downswing. Here you can also see kind of a head and shoulder formation, left shoulder, head, right shoulder, then a breakout of a horizontal support, but also it's H4, not D1. And here downtrend, flag, head and shoulder formation, and this one is what I don't like here, but maybe it can be considered as a false bullish breakout, and it should cause a downswing here. But if we consider that we're coming back to the technical trading, we should see a breakout of the lower line of the flag, then breakout of a horizontal support here, and then movement here. It's 380 pips, stop loss 230. It's not the best deal in the world now. It was a nice deal before, but now in terms of the risk to reward ratio, I wouldn't call it the best deal in the world. We can summarize now, and I can show you some better ideas for trading. Like for example, cable looks decent for a short position. Euro dollar looks decent. Australian dollar to American dollar looks very decent for a short, a small movement. And gold, no. This one, Euro to Canadian dollar, looks decent for a stop loss somewhere above the neckline, and the potential target for us is here. So, for example, 170 to 500 pips. So as you can see, I showed you a few decent examples. Also, Euro to Australian dollar, I would say that the downswing here should happen anytime soon. Okay, so instead of trading on Kiwi, which was good the last week, actually in November, not in December, you have other trading occasions which I was talking about today. Okay, I think it's clear. As you can see, despite the fact that we are approaching Christmas, we still have a nice technical trading. We still can spot nice trading occasions, but we will have fewer of them closing to Christmas and between Christmas and New Year's Eve. It's time for the families, not for trading, but we are here. If you want to trade, you can count on us, and you can stay with Alpari for decent trading occasions, because as you can see on our Twitter or our website alpari.news, our trading ideas, they do work. Okay, and you can also see that on our live trading account, which is showing profits. Okay guys, thank you very much for watching. Remember to follow us on Twitter and on our website alpari.news. Thanks very much. Now half an hour break, and after that a webinar about MetaTrader 4. Goodbye.